Welcome to Skytech-Lens. For generations, the US and Canada shared more than a border. They built a deeply integrated economic powerhouse. Trade and jobs flowed seamlessly, with supply chains so intertwined it was hard to tell where one economy ended and the other began. But that trust was shattered when the Trump administration, under an America First agenda, saw partnership as weakness. Suddenly, long-standing trade agreements were labeled unfair, and threats of tariffs replaced decades of cooperation. The breaking point came in October 2025 when President Trump abruptly canceled all trade talks over a Canadian TV ad referencing Ronald Reagan. Negotiations collapsed, and a sweeping 10% tariff on all Canadian goods was announced. For Canada, this was more than a policy dispute, it was a betrayal of a century-old alliance. Prime Minister Mark Carney's government faced a stark choice: capitulate or forge a new path. Canada stood firm, realizing it could no longer rely solely on its southern neighbor for economic security. The foundation of North American economic relations was cracking, and Ottawa knew it was time to look beyond the US. The new American tariffs hit Canada's economy like a sledgehammer. Steel, aluminum, and energy sectors faced crippling levies, threatening the industrial heartland from Alberta to Ontario. The auto industry, Canada's manufacturing crown jewel, was on the brink. 500,000 jobs in southern Ontario at risk. Supply chains unraveled, factories faced closure, and farmers lost access to their biggest market. Canola and wheat growers watched harvests rot, their livelihoods in jeopardy. The pain crossed the border. U.S. manufacturers relying on Canadian materials saw costs soar, making American goods more expensive. Midwest factories struggled with higher prices and shrinking profits. The very industries tariffs were meant to protect, now caught in the crossfire. The tariffs turned trusted business relationships sour, forcing both countries to question the future of their economic partnership. For Canada, the message was clear: the old rules no longer apply. For the U.S., unintended consequences mounted as allies and industries pushed back. The era of easy North American trade was over. Both nations faced a new, uncertain reality. The stakes had never been higher. With Washington's demands growing harsher, Canada had to act fast. The Carney government rolled out support packages for battered industries and kept retaliatory tariffs on U.S. goods. But the real shift was strategic. Canada began aggressively diversifying its trade. Asia became the focus, with Prime Minister Carney launching a diplomatic blitz to secure new markets. Canadian exports to Asia climbed, especially in critical minerals like nickel and lithium. Smaller trade deals multiplied, and Asian investment in Canada's resource sector surged. For the first time, Canada was actively reducing its dependence on the U.S. The pivot was more than economic necessity, it was a declaration of independence. Canada was determined to build a resilient, globally connected economy. The old reliance on a single partner was over. A new era of Canadian trade had begun. As Canada looked to Asia, China seized the moment. Beijing offered a sweeping trade deal, targeting Canada's hardest-hit sectors. The centerpiece: China would ease import quotas on Canadian agriculture, especially canola, offering farmers a lifeline. China also opened its vast market to Canadian energy and minerals, providing new outlets for resources blocked by U.S. tariffs. The deal included a bold EV partnership. Canada would allow Chinese-made electric vehicles, and in return, China would fully reopen to Canadian farm goods. For Canadian consumers, affordable EVs beckoned. For farmers and miners, new markets promised stability. The offer was more than economic. It was a strategic play to pull Canada closer and counter U.S. protectionism. At a time when the U.S. was closing doors, China was opening them wide. The proposal forced Ottawa to weigh old loyalties against new opportunities. For many Canadians, China's offer was a chance to survive and thrive amid economic upheaval. The stakes were geopolitical as much as financial. Canada stood at a crossroads. For Canadian workers, the trade war was personal. Jobs and futures hung in the balance. In southern Ontario, auto workers faced layoffs as U.S. tariffs threatened their livelihoods. Decades of prosperity built on cross-border trade vanished overnight. Business owners scrambled to adapt, feeling betrayed by the collapse of a once stable relationship. Government support offered only temporary relief. The real solution was finding new markets. China's offer brought hope to farmers and energy producers, desperate for buyers. But in manufacturing, the prospect of competing with Chinese goods, especially EVs, sparked anxiety. Still, the threat of U.S. tariffs was more immediate than distant competition. For many, a risky new partnership was better than slow decline. The consensus: Canada had to move forward, even if it meant embracing uncertainty. The trade war forced a painful reckoning. Old assumptions were gone. Survival meant adaptation. The future would be built on new alliances. Canada wasn't the only ally feeling the squeeze from Washington's hardline tactics. The US used economic leverage to pressure Japan and South Korea, demanding massive investments and concessions. Japan balked at what it saw as economic coercion, refusing to pay billions to support American industries. South Korea faced threats of renewed tariffs and saw its engineers detained in the US, a move that froze new investment. These incidents revealed a pattern. America first meant no special treatment, even for its closest friends. Ottawa watched as Washington's approach backfired, breeding resentment and resistance. The message was clear: no ally was exempt from pressure. For Canada, this reinforced the need to diversify and reduce dependence on an unpredictable partner. The era of automatic trust was over. America's allies were seeking alternatives. The global balance was shifting. Canada was determined not to be left behind. Canada's decision to accept China's offer was a calculated gamble. Months of fruitless talks with the US left Ottawa with no good options, only escalating demands and no guarantees. China's deal addressed urgent needs: new markets for farmers, stable outlets for energy, and a foothold in the booming EV sector. Economically, it was a lifeline Canada couldn't refuse. Politically, it was a declaration of independence, a message to Washington that Canada would not be taken for granted. The Trump era exposed the risks of relying on a single partner. By pivoting to China, Canada asserted its sovereignty and embraced a multipolar world. The global landscape was changing, with China courting allies as the US pushed them away. At the ASEAN summit, the contrast was clear: America isolated, Canada forging new ties. The world was moving on, and Canada was determined to lead, not follow. The decision was pragmatic, not ideological. It was about survival and seizing new opportunities. Canada was ready for a new chapter. Canada's pivot to China redrew the global economic map. The New Deal diversified Canada's trade, giving farmers and energy producers a vital buffer against US protectionism. Canadian consumers gained access to affordable Chinese EVs, while the economy shifted focus toward Asia. For the US, the results were mixed. Tariffs hurt allies and industries, and America's influence waned as partners looked elsewhere. Midwest factories struggled with higher costs, and retaliatory tariffs bit hard. China, meanwhile, found new markets and saw its exports grow. The lesson: economic power alone can't dictate terms in a connected world. Canada's painful evolution brought new independence. The US faced the cost of damaged alliances. The world was changing fast. Those who adapted would thrive. The trade war's lesson is clear: cooperation beats coercion in a global economy. America's tariff strategy backfired, damaging relationships and hurting its own industries. Allies like Canada, Japan, and South Korea refused to bow to pressure, seeking new partners instead. Canada's pivot to China was the most dramatic example, a direct result of US missteps. Protectionism proved self-defeating, raising costs and fueling uncertainty. Prosperity depends on open markets and trust, not threats. The story is a cautionary tale about the limits of power and the value of diplomacy. Strong partnerships are built on respect, not dominance. The future belongs to nations that collaborate and adapt. True leadership means building bridges, not walls. Thanks for watching. Subscribe the channel for more updates.